excited for this. One of your favorites. It's gonna be good, man. People are gonna want to rewatch this. People are gonna want to rewatch this. And then people later on are gonna be like, hey, I don't understand, you know, why do you keep talking about these order blocks and fair value gaps? I'm like, we did a whole life class on it. Whole life class. All right, let me go ahead and ping real quick. Bum, bum. Oh my god, I didn't even set a reminder. My bad. Let me go ahead and I'm so used to Lucy doing them, I didn't realize it wasn't done. There you go. What's good, man? It's gonna be a good one. All right, cool. Yeah, so there was no like 1 hour ping ahead of time, but it's all good. I just pinged. We're all set. Let's do this. All right, I'm gonna try to make sure that I do this in some sort of reasonable fashion. Let me just go ahead and see what's going on with my alerts real quick. Let me go ahead and just take a look. Boom, boom, boom. All right. Cool, so I might have some alerts triggering, but it really doesn't matter. So today we're going to be talking about smart money concepts and order blocks. So I actually don't know how far smart money concepts go. I've been studying everything kind of like out of order recently. The past week and a half or so, I've been studying some of ICT, which is essentially like a guy on YouTube, which has been teaching people how to trade extremely profitably using smart money concepts and some other stuff. He's absolutely goated, absolutely. But there's a lot to learn there. I haven't fully gone through the videos or anything. I've just been looking into some of the concepts, and man, these are powerful. That's all I'm gonna say, guys. Very powerful. So first, I just want to go through some examples because there's just so many. I'm just gonna go ahead and go on some random exchange. How about this one? I never used BitGet for my charting, so let's do this. So right now what I have pulled up is ICT imbalances. Just wish I didn't rant and go off topic so much. Yeah, a lot of people really like to go ranting, and yeah, I've heard that before from ICT. So let's do this. So I guess I'm just gonna use this one example. All right, so when you're going to be looking for some sort of trade using smart money concepts, all right, you need to find yourself some sort of area of interest. So at the moment I'm on the 1 hour. All right, 1 hour is what I'd recommend you start off with. I don't really recommend going 4 hour and daily for this kind of thing. It's not going to be as useful. Sometimes you're gonna find some good order blocks off the daily or off the 4 hour. It can be useful, but I would just recommend that you, I'm gonna look at that video later, Tiss. I recommend that you just, you know, take it easy and just focus on the 1 hour and then just zoom in, all the way down to the 1 minute, even if need be. So first things first, this is an indicator. This mostly just talks about, this mostly shows us volume imbalances, which let me just go and find you a little example. Let me see if I see one over here. I don't see any right now, but I really want to make this simple. I don't want to take too long on this. Let me just try to find one really quickly. It's actually a pretty good chart. There's a lot of liquidity on here. That's one issue that I'll say while I'm kind of looking for this. Usually you don't use this for crypto. I've noticed that it works actually really well for crypto. But the thing is, this is usually used for traditional markets. Usually this is something that you would use on the S&P 500, on NASDAQ, etc. Using fatty indicator. I'm using this one, fatty, that sounds terrible. I'm using ICT imbalances at the moment. I also have smart money concepts from Luxalgo, and there's also another one from Luxalgo, but that's what I'm using right now. But I don't really use it too much. Like, I'd like to just find gaps really quickly and then just map them out. Anyways, I'm not really able to find anything, so I'm just gonna go ahead and draw it out. We're gonna find an example later anyways, but I just wanna make this very clear so that you guys understand what's going on and you're not totally confused. So here, this is a green candle. All right, let's just pretend that this is a green candlestick, okay? And so usually you would have your next candlestick, right, come in, let's just say another green candlestick, like right there, right? There's no gap in price. Like the actual price is, just do this, right? The candles are touching each other. Okay, now maybe there's gonna be a wick. All right, so let's go ahead and just add in a wick. maybe there's gonna be a wick like this. So this would be your candle. I'm just gonna go ahead and do this. All right, so these are candlesticks, right? This looks a little bit better already. So we have the body, bottom wick, top wick, body, bottom wick, top wick. What happens over here is that the candles are closing at the exact same spot, all right? The exact same spot of 27553. A volume imbalance is whenever there's actually a little gap. All right, I'm gonna just move this really quickly. All right, you notice over here there's a gap. There's I don't know how it would work with the. Let's just pretend there's no wick to make this really simple. As you can see over here, there's clearly a gap in price. So whenever you see these happen, these are volume imbalances. Now, whenever you see no wick and you just see something like this is just a normal gap. This is just a price gap versus a volume balance. All right, so boom, boom. You're gonna see a lot of these volume balances on like random coins. So I'm on BitGet. Let me just remember that. Let's go on some random ass coin. Let's just go on like waves on gate.io. There you go. Volume imbalance. Right? See, there's a billion of these. Now, does that mean that these are like legitimate and you should follow them? I honestly don't know. I wish I could answer that, but but as you can see over here, this is a clear volume balance. Okay, this is pretty clear, and that's because there's just no liquidity. All right, this is gate.io waves, but this did actually play out, right? So how do you use volume balances? These things need to be filled. They're just like gaps. Okay, so you have this gap, it goes down, and then eventually we come back up, right? Think of the CME gaps. Whenever we see these CME gaps get created, right, over here, clear CME gap, boom, what happens, right? Fill it. We fill it perfectly right here. Sometimes it takes a bit longer, like over here there's a gap, boom, comes back up. Bigger gaps, all right, like this is a real gap. This is not a volume balance, this is just plainly a gap, okay? And these usually do get filled. I was talking about this recently, saying that we gotta keep this in mind. Technically now, we have more of like a gap from there. Let's just say around 27K. And on ETH, just if you wanna know, it's about 1845. So we're looking to fill this gap. As you can see, this ICT imbalance indicator shows there is a gap here. It already marks it up. So let's go and just go back to get. So that's a volume imbalance, and then from there, there's a couple of other, settings. I guess you could just copy what I have. I'm not saying it's perfect. I'm just saying it's a little bit better than the usual. Then gaps once again. This is FVG BPR. So I don't know what BPR is, to be honest, but I know that FVG is a fair value gap, and I'm going to go ahead and explain that in just 1 second. That's what you're looking at. These are super important. You're going to need these, and then from there you also have in other indicators some stuff for order blocks and all that stuff. But anyways, for now, that's just all I want to show you. Let's go one by one. So Surgical says, is there a general rule of how long before the gaps get filled? I know each time is different, but are we talking like minutes or weeks? Yeah, so it depends, Surgical. I mean, obviously, if you're on the daily, it could take a bit longer, right? It could take a little bit longer. Let's just go right here. It could take a little bit longer, as you can see. Some of them are going to take a while. So over here, it's a gap, and it hasn't gotten filled yet, and it's been 381 days. Does that mean it's invalid? No, because it's there, right? Over here, for example, it took about 283 days to get filled. And once it got filled, we clearly got some chop out of it because there was a lack of direction. All right, let's go back. Swap crypto. Cool. So, all right, with that being said, I think it was on the 1 hour. All right, so over here, this is a trade example. So smart money concepts, I can just go ahead and pull this up. Hold on. Let me see if I can figure this out. I had one which actually showed everything. Let me just go ahead and see if I can add in another indicator. I had one which was perfect for this, just so that I can just have an indicator which shows everything. So you guys are like, okay, I understand. Maybe this. Yeah, basically. It's not showing very much, but yeah, you get the point. So over here, as you can see, this shows a MSS, market structure shift. So as you can see, after we broke these highs, we ended up going from a downtrend to an uptrend. So why? As you can see over here, we have high, lower low, lower high, lower low, lower high. As soon as we broke this, right, which was this high, this is a market structure shift. This means that we are now no longer in a downtrend and we're now moving into an uptrend. And what happened after? Big move, all right? Over here, this is order block. It says there was an order block right here, and we moved off of that. And if I just move up, you can see that's also break of structure, right? As soon as we broke that, we kept going up, right? As you can see, this is like a mini downtrend, not really anything major. I would not use these types of indicators too much without knowing what you're doing. It's just kind of to help you get into it and find some stuff. So anyways, as you can see over here, we had this uptrend, right? So we kept moving up and up and up. And then from here, we had this low. As soon as we broke this low right here, this is your confirmation that we have a market structure shift, all right, MSS. So that's your market structure shift, because that means that we're no longer making, you know, higher lows and higher highs. It means we have broken this higher low. So as soon as we saw this candle go through and close, that was your confirmation. Okay, we are now going into a potentially some sort of bearish market structure. So we broke that. We bounced off these EMAs. I use these EMAs off the 5 minute usually, so I'll just hide them for now. These are very, very useful for identifying the trend whenever you're trading, whenever you're scalping. So anyways, we have this market structure shift, and now you're going to be looking for shorts. Why are you looking for shorts? Because we are now expecting the markets to come down. So as you can see, there's a fair value gap right here. I'm going to go ahead and just hide this now, and I'm going to go full raw with you guys. All right, just bare eyes. So, so over here, you're going to go ahead and grab your box, and you're going to go ahead and grab from this wick. All right, there's a very small wick, but it's still there. It could also be from the candle. It doesn't have to be a wick. And then from there, you can see we have a fair value gap. Now, why do we have a fair value gap? All right, this right here would be a bearish fair value gap because we're moving down. The reason why is because there's clearly some space right here. All right, there's clearly space between this level and this level. All of this is what makes a fair value gap. Why do these get formed? These get formed whenever we have huge moves and the large players are not able to get in. So the reason why we almost always fill these, or at least come back up to a certain percentage of these gaps, is because the large players want to get in. They want to get their bids. So let's go ahead and look at this. First of all, uptrend, right? We're coming from this large uptrend, and now we're starting to get signs of reversal. On the 1 hour, we have a market structure shift. That's pretty major, considering we're on the 1 hour. And we have this bearish fair value gap that was formed. Okay, so interesting. All right, we're starting to get some pretty good confirmation. Now, you could even add more confluence and say that we had a liquidity grab over here. All right, so we had this liquidity up here, and then we had all these, like, you know, relatively equal highs here. All right, so we had the relatively equal highs. We broke right through it, right? So we grabbed all of this liquidity where we had stops, and then over here as well, we had a ton of liquidity as we just had a little wick, right? Over here, we were basically coming back up to this, which we did come back up to, right over here. And so all we did was grab liquidity. What does it mean to grab liquidity? It just means grab all your stops, grab all your shorts, etc. Usually for you, it usually just means that you have your stop loss up there. So let's say you were shorting right here. Like I was talking about this short on Bitcoin, how you could have just shorted this a bunch of times. And I was saying eventually we're going to have to see a move up. I told you this in like the last class, saying we will have to have a move up. And guess what happened, guys? We had a move up. All right, what a surprise. And I was saying we need to take a liquidity. So is the liquidity right here? For some, it may be, right? So this is right above this wick and right into all of these relatively equal highs. Or maybe you have it right here, right above this wick. That would have taken your stops out. So that's the whole point. All right, so this over here was a liquidity hunt. And then from there, we ended up closing way lower than the wick was. So liquidity hunt, all right, we had a liquidity hunt, we had a market structure shift, and we had a bearish fair value gap get made. Now what's next? What do you want to see happen next? You want to see a pull back up into this fair value gap so that you can actually take a trade. So you want to go ahead and grab your fib tool. I love fibs, I've always loved them, but I've learned how to use them in a much more efficient way than just grabbing your usual fib, which would look like this. All right, this is the normal fibs. I have learned that there is way better ways to use it, all right? And that would be using the discount or the 0.5. Now for now, I'm gonna go and just do 0.5 to keep this real simple, and I'll go ahead and add in a little bit more info in a second, all right? So if you grab this right here, this shows that we came right into this liquidity, right? We came right back up into this order block, or not order block, but our fair value gap, and we did not hit it. Now this is the problem, is that, well, yeah, exactly, this less equilibrium. The problem here is that with crypto, you can never really trust the chart, because right now I'm on BitGet. Now what if I were to swap to Bybit? I'm pretty sure I looked on Bybit and we perfectly filled this 0.5. So what you could potentially do is just work with the index chart and then go on MEXC, and whenever you set your orders, you can go ahead and go off of index, right? Index instead of last/fair. That way you're going to be in a much better position to be, you know, not getting screwed over by these let's just see. So that was 28,055 and the high was 28,045. All right, so the difference was 0.02%, right? What index chart? Well, index, right? BTC USD index. I don't always recommend it, but it can be useful. So that's where you need to be a bit more, how to say this, flexible, right? Whenever it comes down to using smart money concepts and these kinds of pullbacks into a discount zone or a premium zone. So in this case, we used the 0.5, but you could have also drawn this like this, right? Discount. And now like this is going to show you the 618786 and also this negative 0.27 if you want to have some sort of short-term target. So usually you're going to get a pretty clean pullback into the fair value gap. Sometimes it just comes out to the outside. Sometimes it just pulls up here and then it drops. Sometimes it pulls up to the middle and sometimes it pulls up into this golden pocket of 618 to 786 and then drops. And then from there, you would just go ahead and take your short either off the mid zone, early on, or sometime in the golden pocket. I like to just go with the 0.5. And then from there, you either set your stop loss right above this fair value gap or above the wick/candle of the actual candle which printed the fair value gap. So technically speaking, it'd be all the way up there, but you could just go ahead and set yourself up right here in case you have a slight wick above. All right, in this case, it was pretty much perfect. So it wasn't necessary, but it's not always gonna be that nice. And then from there, just go ahead and target liquidity, which it's pretty obvious, doesn't take a genius right here. And boom, that'd be 5.5 risk to reward. Now in this case, technically you did not get your entry. So you would have just gone over the start and then you could have gone ahead and set your stop loss right here above and you would have still gotten about 4.6 risk to reward. So what I just drew by this, by making this fib was essentially a premium. A little premium. All right, so that was that example. Now what are order blocks? I just want to make sure everything's explained and then from there we might dig into more examples. So order blocks essentially is an easy way for you to figure out where the money's at. All right, so you're essentially figuring out, okay, I understand. So this is where I should be looking for longs, maybe you look for shorts. This is where all the orders are piled up. All right, so whenever you set yourself up trade, let's say you're looking to, you know, long over here and have your take profit up here, something along these lines, you would have your take profit be set up here, which means you have an order. You have a selling order, right? So you bought and then you sell over here. So this would be a selling order. Or in the case of, you know, unfortunately being in a short, this could be your stop loss. So that's where the liquidity is at. And this is where people are going to be looking for shorts. On the downside, this is where people are going to be looking for longs. I would recommend looking on the 1 hour or the 4 hour for these. 1 hour is going to be quite nice because it's not going to take as long. And usually you can find these things relatively easily. Now, what makes a good order block? This is the main thing. The main thing that you want to look for whenever it comes down to order blocks is a huge move. All right, so for example, there is no order block here. All right, the reason why is because all we had was a steady, like a little slow downtrend with a bunch of wicks to the upside. And then from there we saw a big candle, sure, but then we kind of just messed around here. So what would be considered a potential order block? All right, here I might consider this little green candle before this drop because this was a much more severe drop. The main thing you need to consider, let's go ahead and draw this out, right? So let's just go boom, boom, order block. So the main thing you need to consider whenever it comes to order blocks is, all right, sure, we mapped one out, but how do you actually trade it? So in this case, we mapped it out at like, whatever, you saw that it was printed about 6 a.m. Let's say you woke up and on Wednesday, like a week ago, you were like, oh, there's an order block right here. I'm going to look for shorts. Now, should you just go ahead and do, all right, well, I'm going to set up my short limit order, boom, boom. All right, let's take this trade. It's not the smartest way to do it. The main reason why is because order blocks are only valid if you come into the order block without a ton of regression, or at least you need to see some sort of reaction. So in this case, obviously we're in the 1 hour, so there's not really much I can do when it comes to this. Let's go ahead and just see how far back this is. All right, it's not too bad. Let's go 15 minute. All right, as you can see over here, this candle was huge. All right, we saw a huge candle over here come into this. Whenever you see this kind of expansion, this is a sign you should not be entering a short. And if it's the opposite, you should not be entering a long because it's just too hard to move. If you have kind of a slow move up, like something like this, for example, right? Let's go and just delete like this and this. If you have this happen where you kind of move up and then you start to have these wicks, right? And then you start seeing more weakness, that's what you want to see, right? You see this kind of thing happen. Let's go ahead and just do a bars pattern. All right, you see this happen. For example, had it happened right here, this would have been perfect. right? This is 100% an entry because you're starting to see some weakness, and then from there it starts pulling back. And then from there, once it pulls back and makes a lower high, this is where you would enter. Usually you can also see some sort of bearish divergence, right? So price went up, and then for example, RSI would go down. Which is why ideally, whenever you have these set up, you have some alerts, and then once we start to get close, you can start to monitor it. All right, worst comes to worst, you could set your limit order, and then hope you don't just get totally wicked out. Because in this case, you would have gone wicked out. And then from there, kind of just consolidate for a while, right in the order block. As soon as the order block gets hit, it is no longer valid. All right, so, for example, once we saw this happen, just because we pulled back under and then came back up, that doesn't mean it's actually valid. Just like if you had an order block, let's just say, let's just say up here, right? All right, this I would consider an order block 100%. All right, so we're just gonna switch examples now. So this is an order block because we have a super strong move down. All right, we have a little green candle. So this is very clean, very easy to work with. You would go ahead and just enter your short. Your short could be just somewhere, anywhere inside of the order block, the start, the bottom, the end, or you could once again just go ahead and use this tool, find some sort of premium/discount zone, use just a 0.5. It really depends how big the order block is. If it's this small, it's not really a big deal usually. And then from there, in terms of your stop loss, there's a couple ways you could do it. I'd recommend you pay attention to this indicator right here called ATR. This will, generally speaking, help you a ton whenever it comes to figuring out how big your stop loss should be. So over here, you can see it's a 62.5 down there, which is why I would set my stop loss to be 62.5 roughly. All right, this means that even with this wick, all right, for example, had you set your stop loss just above the order block, you would have been stopped out. Had you set it up just above these wicks, you would have still been stopped out. Had you set it up, above these wicks right here, roughly at about, 50 to 60, you would have been fine. So let's just go with 62. And then from there, you have this super crazy move going into it. Let's go ahead and just go on a 5 minute and see how it looked. How did this happen? Right, so we saw a pretty big move, right? But then from there, it just pulled back. So this is fine. I have no idea to this list. I really wish I could answer that. I saw it on a YouTube short. I looked into it, and I saw people talking about it and saying that it was good. I tested it out myself with about 10, 15 trades, and it works. It really helps. Now, is it like so crazy that it's like literally to the dollar for everything? No, but it really does help to make sure that you're not too tight with your stops. All right, so then from there, you would essentially just look for some sort of take profit, which, I would just look at these. Like right here, this would be some sort of area of interest. Maybe I wouldn't set it that low because I can see we have some wicks over here. I'll probably set it up to this wick. Somewhere around this wick and this wick. Let's go ahead and just draw a little box to make it a bit more visually appealing. All right, so as you can see, we have this wick and then we have these highs. So in this case, this would have played out pretty well. All right, would have played out instantly, and even if it hadn't, then, this came back. And this would have been about 5 risk to reward. Following ATR. Had you done a little bit tighter, you could have gone a bit more, but it doesn't really matter. So that's how you would play out an order block. That's how you would play it. I think ATR uses MA to take into account. Yeah, that would make a lot of sense. So basically, this example, essentially example of when not to be taking a trade because way too strong. Move is way too strong. Actually, this was the trade that we took. I thought this was familiar. Hold on. Get ETH perpetual MIX. I have no idea what that is, but okay. I'm looking on the 24th. There you go. All right, this is the trade that we took on MEXC. Right here. So on perpetual futures, we ended up getting this wick. Right, we had this wick, which did not happen on. No, it was this wick. I have no idea. Anyways, it doesn't really matter. The point remains the same, essentially. So we had this entry right here, super crazy move up, and then from there, this was your entry. Stops were relatively tight. I don't know what I did. I don't know if I followed the 10 or if I just did 5. I think I probably did something like this. And then I just took my profits relatively quickly because I did not know where this is going to go. We were starting to have bullish market structure, but we did definitely have a reaction, as you can see. All right, so we had this reaction right here, which in this case it didn't hit, but I'm pretty sure on, let me go and see, 7 a.m. Thursday. 7 a.m. Thursday. Yeah, so there you go. As you can see over here, 7 a.m. Thursday, this one wicked higher on MEXC. which is why we got this fill. So wick perfectly to it. If I just go to a shorter time frame, you'll see that this was just pure wick. This is lucky, right? This is one of those lucky instances. And then I just kind of closed it right there because I didn't know what was going to happen next with the markets opening. Cool. All right, so let's actually go into some examples where we go through all the structure. Remember, if you have any questions, I'll gladly answer any questions you guys have. Any questions? So let's, I'll go ahead and look at some of the trades that I'm taking a look at. All right, so I think it's 1 hour. What if BOS, break of structure? What do you mean? Right now the Bitcoin 1 minute did a perfect example. Okay, I'll look at that. Yeah, it looks pretty nice actually. So what are we looking at? All right, as you can see, let me go and just map this out. Low, higher low, higher low, high, higher high, higher high, and then relatively equal high. All right, this is like kind of starting to get into weird structure because you have, in this case, a high, then a lower high, then an equal high. This is when you start to know that you're getting to some weird territory. Now, as soon as we broke this level, all right, on the 1 minute, obviously this is 1 minute. Don't go crazy, guys. Usually you want to find these on higher time frames and then get confirmation on the 1 minute, not just find it on the 1 minute. So anyways, as soon as we had this candle close below, this was a break of structure. We are no longer making lower highs or higher lows. We are not making a lower low. What are we looking for? All right, boom, boom. That's your fair value gap. Once again, there's a gap between this candle and between this. This is 1 minute, this is Bitcoin. It's not going to be clean, but it's still the same. It really doesn't matter. It's going to show it to you on these indicators, you can see. So yeah, boom, boom. And then from there, we moved down. We grabbed some liquidity at these relatively equal lows, and then we pulled back up. Let's go and grab a fib. And yep, same thing, just did not quite make it. That's the main thing with crypto, man. Sometimes it's really clean. Like I saw certain examples going perfectly to the golden pocket, but some of these just really are not very nice. So what I would recommend you do with crypto is just straight up enter off the bottom, stop loss above. And yeah, in this case, right now you'd be up about 1 risk to reward, which is not too bad from this. What would your target be? At the very least, these relatively equal lows going into this high for 2 risk to reward. And then if you want to hold on to this, then yeah, I mean, there's a lot of relatively equal lows down there for 8 risk to reward. You can just scale on the way down. The main thing you want to see when it comes down to this market structure is to hold this trade is do not have a close above this. If we see a close above this level, we are now going into an uptrend, right? Because then this would be a low, a high, and then from there this could be a higher low, and then if we break this, then you know, higher high, higher low, higher high, higher low, etc. Right? So that would be your confirmation. If you want to exit early, instead of having your stop like a little bit higher, that's how you do it. What if break a structure? Does it help to identify change of character? Yes. So a change of character essentially would be, for example, this right here, right? So this is your resistance, 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 resistance. As soon as we broke above and closed, this is a change of character, I believe. And that means this is no longer resistance, it's now changing, right? And so then from there, now we have support, support. So that's why it's changed the character, essentially. It's no longer resistance, it's now support. And this would be, you know, once again, kind of an awkward break of structure, but yeah. That's a break of structure, going up, retest, change of character, and then start to look for some sort of position. In this case, we had this right here, this fair value gap, pretty clean. This would be a bullish fair value gap, so I'm just going to use this template. And so this was when the fair value gap was made. This is when you would enter. Stops could be right below here, and then your target, you know, anything you want, but you could have easily gotten 5 to 6 risk to reward on this. Then you need to take the equilibrium from top to bottom, not just the fair value gap. I mostly just, I don't really work with the equilibrium much. It really depends though, just list like people teach things differently. Like for example with, let me see. For example with like an order block, right? I could grab it from like this, right? I could grab it from the top to the bottom, like so. Or I could just grab the candle body. And then from there I could just go candle body like this, as an example. Or I could do the whole thing. It depends who's teaching you, right? Depends who you're actually following. With fair value gap, can it be any 3 candles, or do all 3 candles have to be the same type? So it doesn't matter, Surgical. I don't think it matters at all. Let's just turn this on. Let's see. So for example, over here, we made one with 3 bearish ones. Over here, we made with bearish, bearish, bullish. So it doesn't matter. Doesn't matter. And over here, as you can see, bearish, bullish, bearish, right? Just depends on the momentum, right? Is this going up? Is this going down? Yeah, exactly. This list totally depends. So yeah, that's essentially what I just found on Bitcoin, right? So pretty good examples. All right, so I'm gonna go ahead and just go back now. There's some really, really good opportunities. It's honestly insane. I think I saw one which was just insane on XRP. I saw a pretty crazy one, and I was like, damn, that's actually insanity. It's so clean. Anyways, so what was I doing? I was looking at something else. I feel like I was looking at something else. Anyways, so let's go and just find ourselves an example. Let's just go back in time, because apparently we can do that as humans. It's pretty cool. It's kind of badass. So let's see. Is there anything over here? Anything over here? All right, so I mean, there's a couple of things to be said here. I kind of feel like using replay, but it's such a pain to use replay, I find. I'll just do this like this. All right, so first of all, where are we coming from? All right, so what am I looking at? I'm looking at this time frame. This is what I'm looking at right now. Now, we're kind of coming from some really weird price action. All right, kind of like a pump, dump, etc. Very weird price action. But essentially, the most simple way to say it is that we are in a downtrend, because we have a high, lower high, lower high, lower high, lower high, etc. So we are in a downtrend. Over here, we essentially just came up to make an equal high with this and relatively equal high with these wicks. Cool. This wick actually ended up being perfectly aligned with these bodies. So this is just a liquidity hunt. Once again, this is super important. So step 1, identify the trend. We're in a downtrend. All right, step 2, find a liquidity hunt. So something which essentially defies the trend, something which fakes you out, something which makes you think, oh, okay, we're gonna do this. Or for example, to the downside, we see this, then this right here would make you think we're gonna keep going lower. So that's usually how you know it's a liquidity hunt. And you can also be called a deviation, right? So for example, if this was your resistance, this would be a deviation, because all we did was come up a little bit higher and then just drop right back down. And then whenever we retest it, it's resistance. Something along those lines. Let's just say this, whoops. Let's just say this, right? For example, this is a deviation, we come back up, hold it as support, then move up. This would be your entry. All right, this is not your entry, this is. Different kind of concept. So this is what we're looking at. All right, so we're coming in from a downtrend. We have a liquidity hunt up there. And now we're wondering what's gonna happen next. Are we gonna move up or down? First thing I would do is look for order blocks. All right, so I can see that we already mitigated this one. All right, so we had this huge candle, like absolutely immense candle. Pretty insane, actually. And what we saw over here was a little green candle. A little greeny weeny. You could have taken this right here. All right, you could have also taken it from here if you wanted. Really doesn't matter. Take it from here, take it from here. It's essentially the same kind of idea. If you map out both, you can see they're giving you the same kind of idea. Going from the middle. Let's see what this is saying. It's saying 380. It seems, whoop, are there 2 in there? Seems a little bit too much, but it would be above this wick. So if you really want to be, conservative, you could do that. But realistically, I would probably just set it above this wick, because I don't think we're going to sweep that. And then from there, I mean, we have some pretty nice equal lows there, but I would target this right here. This is good liquidity. This is where we had a little pit stop before we moved up. We even made a fair value gap right there, as you can see. Right? So that's probably what I would target. Maybe my first take profit would be up here, then there and there, etc. Either way, it doesn't really matter. And that would be about 5 risk to reward, based off this order block. Now, what happens after this? All right, after we saw this happen, do you enter off of this again? Is this the same probability as before? It's not, because this order block has been filled. Now, you could enter off of it again, but you need to be very, very careful, because order blocks, usually once they get filled, That's it. You should not be looking at it again. Now, does that mean that you can't find another order block from the next move? I mean, maybe there's something here, right? Maybe there's something here. Let's see. Wow, there's so much more noise on the 15 minutes. It's actually kind of crazy. Look at all that noise. I wouldn't say there's just really anything. I don't really see much. Alright, let's go back to the 1 hour. Cool. Alright, so what was I getting to? I was getting to that there was an order block right here that ended up allowing us to have a short. Alright, roughly a 5 risk to reward short. Pretty good. I'm also noticing we have this other order block right here. Alright, this one's pretty good because we had a pretty decent move up, and then from there we just pulled back relatively quickly. Alright, we did not have any sort of close under, we didn't have a close inside. We wicked down and then came back up. Now, was this the kind of move that we wanted? Did we want to have just like a 1% move? Ideally, we wanted this to bounce harder. That's when risk management comes in, and that's when you have your own kind of strategy. So you would have entered off this wick because that's when it originally came in. If you were paying attention to structure, maybe you'd have waited for some sort of bullish structure, and then you'd have entered. Stop loss could be right below here, and even with just this setup right here, that'd be about 4 risk to reward. All right, what I would target is these wicks. All right, wick, a bunch of wicks. I would just target this. So about 4 risk to reward. Now afterwards, after this, do you enter again? No. Once again, no. Okay. So, bearish structure. We already found a bunch of trades, which is pretty good. All right, we found this order block, we found this order block, and we already identified that we're kind of in a sideways / bearish trend. What do you want to do now? All right, we had this move up and then this move down. We are kind of in a weird place. I wouldn't necessarily want to say that you'd be looking for longs or shorts here. If you had played this long and you noticed that we had, this kind of like relatively weak move up, maybe you would have decided, I'd rather go for shorts. I'm not even going to pretend like I know what the trend is at this point because it's just kind of weird sideways. We just kind of had a weird pump, dump, then sideways, and then just dump. So I'm not going to pretend like I can identify the trend perfectly right here on the 1 hour. Maybe on the 15 minute I find something better. But the main reason why I'm not changing time frame is because I want to show you this. All right, we had this move up, move down. And if you're feeling, okay, yeah, I think we should be shorting right here, then you just set this up right here. And this would be your fair value gap. This would be a bearish one because we're coming down. And you can grab your fib if you want. Let's go ahead and just show you something really cool. Look at that. It's one of those examples, which is nice. We went up perfectly to the golden pocket. So you could have shorted right here from the start of this fair value gap, right? And then from there had your stops, up here, for example. And you would have made pretty good profit if you were expecting price to go down that much. If you're only expecting price to go down, let's say to these relatively equal lows, this wick and these candle bodies over here, just map this out. You can see this wick, this. Then you would have made yourself about 1.3 risk to reward, which is not great. Now just moving this up to the 0.5, 2.4 risk to reward. Bringing this up over here, 3.6. So you could either take multiple entries or you could just take one entry and just kind of deal with it, right? So if you're always aiming for this golden pocket and you don't get filled, then deal with it, right? If you're always going for the bottom of it and it just keeps moving up, then maybe change your strategy. If you find that it's always hitting the top of the golden pocket, then maybe just always enter off the top of the golden pocket. You may miss some trades. Once again, deal with it. That's just part of life. So in this case, had you entered, let's just say in the middle of this golden pocket, your stop loss up here, you could set it a bit lower if you want. I would just set it right here. And then from there, you could lock in 3 risk to reward like this. And if you were to just zoom out a bit more, we had some really, really clean equal highs right here. So as you can see, we had, zoom that in. As you can see, we had this wick, these candles, swing failure, this retest. Where do you think we're going to go, right? So that'd be about 12 risk to reward. That'd be 12 risk to reward with this setup, which is why I highly recommend you guys start looking into smart money concepts, guys. Like seriously, order blocks, fair value gaps, market structure shifts, all this stuff is extremely powerful. It's stuff that I've never paid attention to, and after paying attention to it in the past, like, let's just say 2 weeks, I've noticed that it's just incredibly powerful. It's insane. It's actually insane. And even with the imperfect order blocks, even with the imperfect setups, you're still going to be able to get lucky sometimes. I would not say this is a very nice order block, all right, because we have some really weird wicks. We have some like loss of strength. This is not nearly as nice as just like boom, 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 you know, like this. This would be super clean, right? This is a very nice order block right here, for example. Super nice. Super, super nice. Super nice. Little green candle, then boom, right? There's no wicks to the upside, just 3 big candles, all right? 4. So had we pulled back up to here, this would have been a super nice trade. For example, had you taken this and thought, you know what, this is an order block, I'm just going to enter off the top, you'd have actually gotten a pretty decent trade, right? Stop loss over here, and then maybe target, I mean, you could target this liquidity up here, I guess, but I'd probably just target that. We have quite a lot of liquidity right in the middle. And I'm sure if I pulled up a volume zone, this would probably be an important level. But anyways, that'd be about 5 risk to reward. And this is not even off of a good order block. This is off like a pretty mid one. I mean, over here too, you could have potentially taken this trade. Would not have been the nicest thing in the world, once again, because this was just one red candle and then just chop. This is not by any means an order block that I would want to trade. But if you did, you would have already gotten about 1% there. Let's just go ahead and look at this risk to reward, because that's all that really matters. If you enter off this, and you have a stop right here, then you've gotten about 2 risk to reward. On the next one, had you taken the exact same thing, you would have been stopped out. Had you gone off the middle, taking your stops a little bit higher, you would have been able to lock in about 3 risk to reward, etc., etc. But obviously, I would not recommend keep entering. All right, if you're going to go off a bad order block, well, you know, I would say a relatively low quality order block and then re-enter time and time again, then you should not be surprised that your smart money concept trading is not doing great. That's all I'm going to say. Cool. Now, let me say this, because I just realized this is an unmitigated order block, and it's pretty old, right? At this point, it's getting pretty old, considering more than 1 hour. It's like 24 days old. Is this something I'd recommend entering? Yes or no? What do you guys think? Would you want to enter this short or not? Like borderline, just set a limit order up there and set and forget. No, nobody cares. I'll give you the answer in 3 seconds. No, this is caffeine. For what price? Yeah, so I'm saying essentially entering this short. All right, we have an order block right here, and we never came back up to it, as you can see. So whenever we do come back up, would you want to short this? Do you just want to set a limit order and, you know, something along these lines? Yes, but I would set my stop loss over the level of support. Over the level of support? You mean resistance? So, straight guess, no. I mean resistance. Yeah, Skillin. So, what I would say is, if you want to gamble, go for it, right? It's fine. Like, it's just because it's sold doesn't mean it's necessarily invalid. But a lot of the time, especially whenever it comes down to stuff like the stock market, where you actually have the markets closing every day or every week or every month, these orders are going to expire. So people are just not going to have orders there anymore. They're just not going to care. What are they going to care about? The little order block that might be over here, right? Not the one that's like 24 days old. So could it be important? Yeah. Is it because of the order block? Probably not at that point. Probably not. So if you are going to take this, then take it as a like degen trade, and you just risk very, very little. Just do it for education purposes if you want. So, all right, what next? Let's find a trade. Let's find a coin. I'll also just look at Forex really quickly just to show that it's applies to everything. I'll just go random pair, odd CAD. I don't know if anyone even trades this. I'm just gonna go and look. I mean, I can see an example right away. I already see one. Pretty recent too. And right now I'm on the daily, don't forget that, right? I'm on the daily. So that's, whoops, not order block, my bad. Bearish for value gap. So we have a gap right here, as you can see, between these two wicks. Grab a fib, bidding, badang. This one also jukes us, that's funny. That's really funny. Actually, I haven't seen very many where you actually get juked like this, where like just barely doesn't even hit the 0.5. And pretty much all the examples that I've actually found myself and traded, pretty much all of them hit. So this is actually pretty funny. This just goes to show you that markets are inefficient, and whenever they do actually give you these really clean entries, like in this case it'd be perfectly on this wick, you got to take them 10 out of 10. So let's just say you'd enter off the bottom, stop loss over here. You would have been up about 1.7 risk to reward, but right now you'd be up about 1.2. What would you target? I'd be pretty happy targeting this. Alright, we have this wick, these candles, and all this liquidity. 4 risk to reward, that's decent. So that's daily. Let's just go ahead and zoom in and see. This is a random pair. I've never looked at this pair my whole life. And there's obviously a ton of that one get filled. Let's go and turn this on. You can see there's a million which one get filled. A ton of them. And there's also implied fair value gaps, which are quite different. I don't completely understand them, but essentially from what I understand, it's like in between the wicks, like this. This is the implied fair value gap right here. All right, right here. And it's essentially like between this wick, like this wick, something along those lines. Don't completely understand it, but does it work? I mean, you tell me, right? You tell me. Looks like it works to me. And ideally I could find a volume balance, that'd be fun. I can find a ton just on ES and NQ today. There was a million of them. Oh wow, there's a lot. There's so many of them, dude. It's insane. I don't know why it's not showing them. But anyways, I mean, just right here. Right here, there's technically a really, really small one. But more easily visible, this one right here. Volume balance. Right, little gap. What happened? We ended up dropping, and then we came back up, and we filled it. Over here, volume balance. Right, we ended up trading on it for quite a while. Boom. Okay. All right. I'm trying to think of what else is important right now to mention. We got about 10 minutes left. Gaps, I'm going to say, are really important. Gaps are really, really important to pay attention to. And if you're on the regular trading hours for stocks, you're going to see there's a million of them. There's a ton, right? I'm just looking at this chart. You can see there's a million in these. And pretty much all these get filled eventually, right? Pretty much all of them get filled eventually. This gap over here has not been filled yet. This gap over here got filled. This one, not yet. For example, over here, right? Tesla, huge gap right here. Whenever you see earnings, usually that's what happens, right? So like that was earnings right here. It came in below expected, right? And boom, that's why we dropped. We made a gap. What did we do? Eventually, we ended up filling it, right? Huge gap. We went down, and then we filled it. Okay. I guess I'll just look at the trades. I mean, I've got some trades that I'm looking at right now. So let's go and just take a look. So Matic, I didn't find anything I liked. We took a nice trade on Matic, actually, on my copy trading. XRP's been going crazy, and honestly, guys, I'm really sorry, because I did not tell you guys that I was buying some XRP when I did. But I bought a shit ton of XRP right here, and I'm up like 25% on spot. I bought 2 grand. 2 grand worth, like right here. I'm up about 25% right now. Dude, I always forget for my spot buys to tell you guys, because I just kind of do it off the fly. I'm like, oh, we hit my level, let's just buy right now, right? So we had like this is a very important level, and I won't explain to you all the reasons why, but the main reasons why I decided to buy XRP were not because of technical analysis. It was because of gematria and numerology and astrology. All right, if you guys hate it whenever I talk about that stuff, well, you guys hate money, because I just made 25% on that so far. I'm looking for a close above this. That'd be very, very nice. Once we close above this, I'm expecting a larger move up. It's not my main XRP chart. I think I've got another one that's a bit better. Yeah. So I'm mostly looking for a move up to the 0.5. I think I have my sell order set at like 74 cents. But we could all the way, I'll go all the way up to like 81 cents in this automatic rally. I need to see strength in Bitcoin though. I need to see some strength. Can you predict the patient's death by examining the monitoring system chart alone? I have no idea, Caffeine. I'm not a doctor. Or a nurse. Do you watch Waters Above videos before you trade for the day? Ask Scone. He only posts twice a week. Once, usually once a week to his YouTube and once to his Patreon. Sometimes he posts a bit more when he has extra decodes and stuff. But he usually just gives you some updates for the week or so. Gives you his thoughts. He's not really someone you follow if you want to trade, like actively. He mostly does like swing. Like his last buys, his last legitimate buys were like during this time period, and he has not sold anything. Boom, boom. My brain is fried, honestly. I'm exhausted. Let me just see. So I think we have this trade on, I'm looking on ETH. Let's go to my altcoins real quick. Let me just look at my other charts real quick, see if they have anything. So XRP, I'm looking for a buy down here. I know this could happen overnight, so that's why I'm just setting my order. If we do get this pullback, I'm looking for this right here. So we have a 1 hour right here. We have a relatively clean move up, pretty strong by all means, right? Like 6%. So I'm looking at somewhere around the mid zone over here. I like this because we had these candles closing and this wick going into it. That's why I have my entry right here. Stop loss slightly under this wick and under the order block. And I'm essentially targeting these highs. I already set this up on MEXC, I think. I hope. If I didn't, then that's really funny. That's really funny I didn't. Because I have no idea if we're even going to be able to hit this in the next like day or so. That's why I set my my alert. So, what was this trade? Did I take that? Oh yeah, I remember trying to take this trade. Unfortunately, we took like a $10 loss on this. That was really unfortunate because MEXC was just not liquid enough for this. I was asking too much of it. I have no idea why I have this set up. ETH, right? So we had this short over here. I think we entered right here, yeah. We entered right here. Went into a little bit of profit, and then from there we kind of just came back up, and then we chopped around our entry. I decided to just cut this because my main reason for entering was just some sort of move back up into premium. That's it. That's pretty much it. Over here I have this entry based potentially off like this gap. Let me see. Yeah, based off the gap. I'm thinking we're going to fill this gap and we're going to hold this negative 0.27, and at the most we're going to swipe some of this liquidity. I don't have a limit order for this. This is more speculative, so I'm waiting. Medic, we took this short. I made a very good call by closing this out. Let's go and see. Medic. Medic 89.13. We closed pretty much at the bottom. Look at that. Damn, that's crazy. So I closed it because we're coming back into this, right? We came back right into these highs. I was thinking we're probably just going to grab this liquidity, which is what we did, and then we moved up. I know Daniel took a nice long. He's another trader. And trying to see if there's anything that was like to trade off of. Yeah, I mean, this fair value gap right here. Could have taken an entry right here. On the 1 hour, I kind of doubt it. On the 1 hour, there was this fair value gap right here, but I would not really pay attention to this because this is old. And a ton of entries on the 5 minute. Cool. Go on EGLD. I will. Waves order block. This is like pretty far, but it could be pretty fun. We barely missed this ARPA one. This would have been pretty nice. And Pepe, I was looking for a short up there. We ended up just continuing to dump. I was looking at it right here and we dumped another like 6%. Unfortunately, we did not get that entry at all. Is what it was. I could probably find another one. All right, let's go look at EGLD. I don't remember what this line was for. I guess it was just this low. Let's go monthly. Looks weak on the monthly. I don't see any strength. Let's just take a look at this. I mean, there is some form of divergence. You can see RSI. Well, this is not RSI. This is ultimate oscillator, but it's basically the same thing. Going up, this is going down. So eventually, this thing's gonna bounce, I would imagine. 31, 33. Yeah, I just don't really see much right now. It's not really much for me to say. This is just one of those coins which I would not touch, because it's just been in a downtrend, right? There's nothing else to say. This is a downtrend, right? High, lower high, lower high, lower high, lower high. I remember this day. It's like, I'm gonna keep talking about this. This is actually pretty much exactly a month ago, right? And yeah, this is when I was saying sell, and now we're down 30%. Just technically speaking, I don't know anything else about the project. Just saying, like, looking at the chart, that's what I see. And that's pretty much it. I don't really see anything else. I think maybe at the worst we come back down here. Let me see what that looks like on the weekly. Yeah, bro, I don't know. I don't know what to say. There's not much for me to say. It's just, these are just weird charts. Kind of like weird downtrending sideways charts. Kind of like downtrends go sideways, downtrends go sideways. Not very clean levels either. Yeah, man, that was it. That was a class. If you want to see really quickly what my orders are, because I'm not telling anyone what my orders are for this. These are it. All right, quickly screenshot it. Oh, we just entered a position on Bitcoin. We're already up $2.50. Oh yeah, we entered right here. Look at that. We're up 350. Live trading. It counts, right? Counts, right? Bitcoin. Let's see. What did I just enter? Oh yeah, I entered this. Somehow I got a fill on that. That's nice. I was hoping to get a short over here. We barely missed it. Are you actually kidding me, bruh? Really? Come on, my G. What is that? What is that? So we have this fair value gap right here. Stop loss above. Bro, are you kidding me? Whatever. We're in this right now. This is pretty high risk though. Remember, I told you guys we're going to higher risk. We're only risking 10 bucks on this. It's not too bad. Yeah, so essentially long off this fair value gap. Pretty simple, right? Fair value gap, looking for a long, stops under, using the ATR as help. Yeah. Cool, that's it. Great class, guys. I'll be seeing all of you on Thursday. Make sure to look at the post that I made today. I made some nice little posts. And if you're copying me right now on MEXC, you're probably up. Hopefully we're gonna get some good trades tonight. Cheers. I'll see all of you very soon.